There's actually multiple reasons why I utilize the wave principle. Number one, it puts price action into a context. For example, many technicians or chartists might be familiar with, or they should be familiar with, the term bullish or bearish divergence. Well, by itself, it's nothing more than a momentum reading, a technical reading. But it's the wave principle that actually puts that bullish or bearish divergence into a proper context to truly let you know whether or not you do indeed have a buying opportunity and or a selling opportunity. The rules and guidelines which actually govern wave pattern development. Very important from a trading perspective. For example, if I'm working an impulsive move followed by a corrective decline, and I believe that's a 1-2 of a larger impulsive structure, there are rules and guidelines which actually govern the development of that form. It allows me to identify protective stops to the pip, tick, penny, very precisely. No other form of technical analysis I'm aware of allows me to do that. You certainly can't identify specific targets, trade targets, or protective stops utilizing indicators and oscillators because they actually gauge pretty much momentum in the market. It's the rules and guidelines of the wave principle that also let me know confidently whether a market is truly trending and does it indeed offer trading opportunities, or do I need to be focusing more on the sell side of the market, be looking to short the market more so than actually buy the market. The wave principle, I think, is an essential ingredient or an essential tool in every trader's toolbox. The products I edit and the purpose behind each product are very simple. I am the editor-in-chief of the Commodity Junctures product, and that service is designed toward essentially forecasting future price movements in the commodity markets. Commodity Junctures covers the softs, grains, livestock, and I do spend a little bit of time examining, for example, gold, crude, the dollar index, because they're very important overall with respect to the commodities markets. So the purpose of Commodity Junctures is to really let traders and also end producers forecast long-term trends in commodity markets. How can a subscriber make the most of my service or services? Well, it really depends on what services they're interested in. If they're, say for example, Iowa farmer, then they'll certainly enjoy, I think, get the most value out of my Commodity Juncture service, because in that service I follow the grain markets. If they're a cattle producer, say out of Texas, of course Commodity Junctures would be the most appropriate product for them.